Well, hello and welcome to Business Morning. It's a trading day right after the last monetary policy meeting of 2025, where we saw the central bank did hold rates there. But we'll get back to that now. But let's get a check on what's playing out with the markets. We've seen oil prices climb after sliding to a one-month low in the previous session. Though an expected supply glut and a potential Russia-Ukraine peace deal that capped the gains. Brent crude there, that was up 0.3%, $62.67 a barrel. WTI still trading sub $60, $58.09, up 0.24%. So we're still seeing geopolitics there driving sentiment right there in the oil market. But what we've seen so far could be a positive week for oil, maybe slightly positive, but we'll see if that's barring any big change in the trades coming up Thursday and Friday. Let's get a check down the local bourse. We see the exchange there, the stock exchange. We snapped 6 days of losses yesterday. The whole of the 5 trading days of last week, it was all down. We had a drop there last week. Kicking off Monday was also down. But we'll see after that decision, yesterday, the market closed in the green. Maybe a coincidence, at this point, but we'll see if that, continues for the rest of the week. So we'll see the 0.10% rise there for the NGX All Share Index. Let's look at how the trading volume, how that played out yesterday. So it was mostly red, so there was not much volume compared to the previous trade. Just 556 million units traded, valued at 18.7 billion in 19,500 deals. So, definitely we did see not much appetite there, but because of the some of the blue chips that did rise yesterday and some mid-cap stocks, that was able to prop up the all-share index. But we'll see if we can continue this green close for the rest of the week. We'll definitely be watching out for that. To other matters now, the Securities and Exchange Commission, they're urging market operators to maintain compliance. That's the Nigeria's SEC. They're calling on the capital market operators and stakeholders there to strengthen and sustain compliance practices to ensure the stability, integrity of the financial market. The Commission says consistent adherence to regulatory standards remains crucial for protecting investors, enhancing market confidence, and supporting the long-term growth of the capital market. According to the SEC, recent assessments revealed varying levels of compliance across firms, prompting the renewed push for operators to upgrade internal controls, maintain accurate reporting processes, and adhere strictly to existing rules and guidelines. And now to consumer protection, at this point from investor protection. Nigeria's Federal Competition and Consumer Protection Commission, they've announced new restrictions limiting digital lending companies to a maximum of 5 mobile applications as part of ongoing efforts to sanitize the online lending space. The Commission says the move is aimed at curbing predatory practices, reducing data abuse, and tightening regulatory oversight in a sector that has expanded rapidly in recent years. According to the FCCPC, many lenders operate multiple unregulated apps, making monitoring difficult and enabling harmful practices such as harassment, privacy violations, and hidden charges. All right, it's budget season at this point, and we see right now Anambra State Governor Chukwuma Soludo has presented a 757.88 billion naira budget for the 2026 fiscal year, a 24% increase from the 2025 appropriation. Addressing the 8th State Assembly in Awka, the governor said the proposal reflects a stronger push for delivery, with 161.6 billion naira allocated to recurrent expenditure and 595.3 billion naira to capital projects. Capital spending accounts for a significant 79% of the entire budget. The state projects 225.7 billion naira deficit to be financed through a mix of privatization proceeds, improved internally generated revenue, and concessionary borrowing. All right, away from the budgets now, definitely we see when it comes to agriculture, a lot of conversations already happening at this time. Nigeria's push to transform its agriculture center That took center stage as the stakeholders gathered for a strategic meeting convened by the National Agricultural Development Fund. The session highlighted a shared commitment to unlocking the full potential of the country's agricultural value chain through stronger partnerships, structure, and targeted investment. The NADF said its mandate is to close persistent financing gaps by supporting farmers and agribusinesses with tools that make agriculture more investable. Over the past year, the fund has launched lending programs with partner banks, expanded processor-led backward integration across all geopolitical zones, and deployed digital systems to verify farmers and improve accountability. Officials emphasize that agriculture remains a major contributor to Nigeria's GDP, yet still attracts limited private credit. NADF aims to serve as a risk-sharing partner, not a replacement for private capital, and is designing blended finance instruments to draw in commercial investors.
Today we are here listening to fund managers, asset managers, especially those that have some considerable portfolio within the agricultural sector. This meeting is a meeting and a networking session specifically designed to listen to experts within the field to help us broaden our perspectives as we begin to foray into looking at how we are going to advance agricultural finance and how we are going to design better products, especially around risk in agriculture. One of the aims and objectives of this meeting is to see how we are going to deepen investment, how private capital can flow better, what are the constraints, what are the challenges, what do we need to do as a federal government institution that has been mandated to drive investment into this sector. It's something we've done before with the banks, sequel to the launch of our on-lending products, where we've now consistently deployed financing across different value chains through an on-lending scheme with banks. We also had something similar with them, where we sat down with commercial banks in Nigeria, performing financial institutions in the country, to listen to them, to understand the ecosystem from their perspective. This has greatly helped us in designing the on-lending products we launched recently and are now deploying. So it's the same thing we want to do with asset managers, with private capital, with fund managers. Agriculture, within modern times, contemporary, historically, has always been faced the challenge of underinvestment. And for us to be able to attract capital, especially that well-sought, much-needed private capital, it has to begin with conversations, it has to begin with understanding perspectives, and then products that will test the challenges that we face are then designed.
All right, there you have it, agriculture getting attention there, and definitely cost of credit, that's another issue when it comes to funding projects in the agricultural industry. But now, let's get a recap of what played out today. I did talk about that's the 303rd meeting of the MPC and the last one for 2025. Let's get a recap of what played out yesterday.
It's interest rate setting season, and Nigeria's Monetary Policy Committee delivers its last decision for the year, holding the monetary policy rate and tweaking the standing facilities corridor.
The committee decided by a majority vote to maintain the current monetary policy stance with an adjustment to the corridor as follows. 1. Retain the monetary policy rate, MPR, at 27%.
The only parameter that was adjusted at the end of the meeting was the asymmetric corridor, which defines how much interbank rates can fluctuate above or below the monetary policy rate.
The liquidity.
Most analysts expected another cut in this meeting, but the CBN governor explained that the committee's choice to hold the rate reflects its assessment that current monetary conditions are beginning to yield positive results.
Holding it is not bad at all. The point is that because the central bank is targeting an objective, but then there is already a disequilibrium. Because you have policy rate at 27%, right, and then you have market rate, the real market rate, at 18%. That is for treasury bills use. You have some other commercial rates that could track as high as 21, 22%. But then you have OMO rates or OMO yield at 25%. So that 25% is doing something for the central bank at this point, is to attract foreign portfolio flows.
With this whole stance seeming cautious, senior economist Paul Olaje weighs in, citing insecurity concerns could be part of the reasons for this cautious stance.
It will be a concern if we say, let us reduce interest rates, because that we already have the fundamentals saying Nigeria may not be a destination where they want to invest because of insecurity. But mark you, insecurity, like I said, durable disorder, when it manifests as insecurity, the ultimate goal will be economy. When it manifests as economy, it will show in insecurity and go back to economy. So the effect we are suffering from is a durable disorder.
In summary, the CBN is holding its fire for now. With inflation showing signs of easing, but still elevated, the central bank is keeping rates high to ensure that gains are sustained rather than reversed. For businesses, borrowers and savers alike, it means high borrowing costs remains for now, even as hope builds that a cycle may return in the months ahead. Laddie Williams, reporting for Channels Television News.
All right, yes, that's from yesterday. But let's hear now from Dr. Victor Obo. He's the Director of Monetary Policy Department at the Central Bank of Nigeria. Great to have you on the show, sir. Good morning.
Thank you very much, and good morning, Nigeria.
Yeah, so, definitely we had the last meeting for 2025, but it seems a lot of analysts were surprised at this decision, this whole decision, and it's coming, even as inflation appears to be moderating. What factors led to the MPC to, maintain this rate rather than lower it? Because we expect normally, once the MPC decides to, cut rates, most of the time, the next meeting, another cut, should follow. So I'm wondering, is there fire on the mountain?
Thank you very much. There's no fire on the mountain. I think at this meeting, there were much more level of optimism given the performance of macro indicators across board. You will agree with me that government as a whole and central bank in particular has attained some substantial level of macroeconomic stability. Considering the sustained deceleration in inflation, the sustained stability of the exchange rate, the sustained accretion to external reserves, all point in positive trajectory. However, we have seen that inflation still remains at high level. Double digit is not something that any economy that aspires to make some dramatic changes will admire. There's the need to bring inflation down to a low level, at least single digit level. That is the aspiration of the MPC. So on the one hand, MPC is cautious. Yes, we have attained some level of stability. We've seen inflation coming down, but it still remains high, and there's still some monetary level of contribution to inflation, where retaining that rate at that level will help to bring it down further. You can see some sympathy for growth also in part of the decisions that were taken, especially at the corridor level. So if you watch the upper corridor, which is the standing lending facility, it has come down to 27.5 because it is now plus 50 basis points and minus 450 basis points. That again gives some little window or headroom for banks to be able to lend lower from the central bank and to be able to support growth.
All right, so looking at what's played out in a global space, and definitely we got that designation from President Trump. saying that Nigeria is a country of particular concern. Do you think that concerned the MPC?
It is something to watch out for, but it is not a serious issue that will crystallize immediately, given the level of diplomatic effort that the federal government has deployed into resolving this matter. The MPC is optimistic that the diplomatic, deliberations and collaboration with the U.S. government will be able to bring this issue under control. But it's not something that MPC whisked away. It was also part of the issues that MPC looked at. But it's not that of a high risk, given the level of diplomatic attention that the federal government has given it to it.
All right, so you did mention the adjusted parameters yesterday, but we kept the cash reserve ratio, liquidity ratio, that was held constant, but just the asymmetric corridor, around the MPR was adjusted plus 50, negative 450 basis points. You did mention that should allow banks, be able to lend more, but what does it do to money supply?
What happened is that when we lower the upper band, which is the SLF, we are saying that banks can borrow at a cheaper rate, from the central bank, giving them some headroom. But at the SDF, the Standing Deposit Facility, we felt that it is important again to widen that corridor so that banks would also push part of that funds that hitherto were deposited at the Standing Deposit Facility. They could now begin to use part of it to trade among themselves. Interbank trading is fundamental to strengthening that corridor and, of course, the transmission of monetary policy impulses. So we want to see better trading among the banks. We want to see stronger intermediation, to the real sector and those selected sectors that will be able to jumpstart growth.
They argue that high interest rates, that increases, definitely increases borrowing costs and also, makes it hard also for households, to, get credits, and kind of like slows economic recovery. Is the CBN and MPC, are they finding it easier to balance, controlling inflation and also, getting some growth into the economy and also expanding credit access? Is it getting easier in your opinion?
Yes, it is. Recall that in the last MPC meeting before the last one for the year, that was the September MPC, that informed the thinking and the opinion of the MPC to cut interest rates by 50 basis points. That brought it down to 27% from 27.5%. That was done to encourage growth recovery, actually. Also, that was the same reason that informed the decision to now reduce the conventional CRR by 500 basis points, which brought it to 45%. And the MPC has also, in a way, apart from retaining the MPR, also considered the adjustment in the corridor within the same direction.
All right, so I did, have a conversation, yesterday with some, bank customers, and they did say that, most of the time when the CBN or the MPC starts to increase rates, the banks, they quickly follow suit, by increasing interest rates, to either businesses or lenders. But when the easing, started, from the last cut, seems they're not feeling the drop yet, when they try to get facilities, from the banks. Do you think, is that normal, for most of the banks not actually giving you lower rates, at this time, even though we did get that 50 basis point cut.
Yeah, the expectation from the central bank and, of course, the MPC is that by any rate cut that is effected at the CBN, between the CBN and the commercial banks, we would expect the transmission to trickle down to retail borrowing rates. That is supposed to be the ideal. But sometimes we also know that, prices are downward sticky because banks sometimes will begin to complain about all other costs, structural issues, cost of security and all that. But in broad terms, we would expect that with much more access to funds available at the disposal of the deposit money banks, they should be able to now channel this credit to some sectors in the economy. And due to that competition among them, we expect that the borrowing costs at the retail level should depress.
All right, we'll definitely keep tracking that. But what timeline or economic conditions would prompt the CBN at the MPC to consider, cutting MPR, going forward? What indicators are being monitored, most closely right now?
So what the MPC has been doing and is in conformity with global best practices in a regime of heightened global uncertainty is to be data-driven, to see what the data is saying between one MPC and the other, vis-a-vis what happens in other climes, especially economies that are our competitors. So what will happen in terms of forward guidance is that if the deceleration, is sustained, if it continues in the near term, definitely the data will provide guidance to MPC on when and how much to cut.
All right. So, sir, before I let you go, what are you seeing in 2026 when it comes to inflation and interest rates?
Sorry, can you repeat that again?
Yeah, I said, what are you seeing? I'd like to get some forward guidance from you. What are you seeing in terms of inflation, interest rates in 2026?
We have a forecast that points to a declining inflation trajectory in 2026. And we expect that the sustained tightening that had happened in 2025 will continue to impact prices going into 2026. We know there are also some risks that we need to grapple with, but we are also getting ready to ensure that we are able to, mitigate some of those risks. So we are building buffers. We are prepared at all fronts to be able to ensure that those emerging risks are adequately contained and they do not have any significant effect on inflation. So on the balance, we expect that the outlook for inflation is positive going into 2026.
All right, thank you so much. And I'll try to share your optimism there. Thank you so much, Dr. Victor Obo, is the Director, Monetary Policy Department at the Central Bank of Nigeria. Thank you for coming on the show, sir.
My pleasure. Thank you.
All right, we'll take a break now. When we come back, we find out what's happening in the logistics industry in Nigeria and West Africa. That's in a moment. Just stay with us. The management of Amadeb Energy Group, led by its chairman and CEO, Debo Olujimi, and have paid a thank you visit to the top management of Fidelity Bank PLC. The courtesy call, according to Mr. Olujimi, is to update the Fidelity team on the progress made and first oil achieved in the oil exploration and production campaign of Emadeb E&P Company. Emadeb Exploration and Production Company will advance with a facility by Fidelity. Take a listen.
Not a scenario that plays out any often in the corporate world. And if it is true that grateful people keep their blessings, then this visitation by top managers from Emadeb Energy Group, led by the group CEO, may fit that billing. Let's backtrack for a second. A few days ago, we brought you reports of a milestone first oil recorded by Emadeb E&P from their oil well exploration costing over $100 million on the spend side of risk. Some of those monies was advanced by a Nigerian bank, Fidelity.
My team and I were here today to commend you because it's not, the race is not sort of swift, but it's just who God decides to have mercy on. And I think God has had mercy on us, this is the only reason why we're here, because without the mercy of God, I don't think the bank would have looked at us and said, oh, we want to avail you $25 million to see us through where we are today. We are the first company to really come offshore shallow waters, produce and be able to export into the market, because there's a difference between you getting the oil and getting the oil into the market.
Fidelity Bank, while acknowledging the rare gesture of coming to thank the financier, say they will do more for Emadeb.
On behalf of the board and management of Fidelity Bank, I want to congratulate you on this successful drilling and of course the first oil from the Ibom field. And we're committed to advancing this oil and gas industry because that's the only thing that's an immediate success for Nigeria. Every other one will take a while gestation period.
And on behalf of our team, we said we should come and present this to you, to the glory of God Almighty. So on behalf of our team, we just want to say thank you and God bless you.
How more can an entity be emboldened?
So phase 2 is going to do two things for us. We're going to ramp up production, and that will dilute our cost and reduce our unit operating cost.
You can hear, you've heard us, we intend to actually drill 2 wells more and take our production to about 12,000 barrels a day, before the end of 2026. And the next step after then is growing the gas business and equally getting the production even to over 30,000 barrels a day.
For both teams, homegrown solutions to indigenous entrepreneurship and business is the new frontier for growth and development. Olu Phillips, Channels Television News.
All right, today we're joined by the leadership of TY Logistics Park, a groundbreaking development that is set to redefine the logistics landscape in Nigeria and across West Africa. As the region's first A-grade logistics hub, TY Logistics Park promises to bring world-class infrastructure, innovative solutions, and a new level of efficiency to an industry that is critical to trade and economic growth. This conversation will explore the market opportunities in the West African logistics sector, the vision behind TY Logistics Park, and the innovations the company is bringing to overcome long-standing challenges. Joining me now for the conversation, we have Arno van der Meer, the Chief Executive Officer, TY Logistics Park, FCCPC. Great to have you on the show. Good morning.
Pleasure to be on the show. Thank you very much.
Yeah, so much to unpack here, and definitely we know how critical logistics is to businesses and all. But tell me about this park here. Tell me about TY Logistics first before we go into the park.
Absolutely. I think I'd like to just take a moment to look into the challenges we're facing in the Nigerian market, especially across West Africa. The challenge we're facing is not new. It's actually systemic. It is years of underinvestment in infrastructure, limited intermodal connectivity, and fragmented customs processes. This has made the cost of moving goods across the region some of the highest in the world. According to the LCCI, the Lagos Chamber of Commerce, it's calculated that about 1.7 billion USD goes missing, goes to losses, written off as losses as company as trying to engage business on an annual basis within the country. Part of this is due to inefficiencies in the port movements and also infrastructure deficits. But within that lies incredible challenges, opportunities as well as challenges. At the TY Logistics Park, we believe the solution starts with integration. We have taken the traditional clearing and forwarding, route-to-market solutions, and contract logistics. We've combined that with the free zone operations together with a digitalized system-run environment. We call it, as we believe in the logistics park, all being part of one ecosystem. Our goal is simple. It's to simplify trade, shorten the turnaround times, and give businesses the predictability they need to grow. Nigeria is at a pivotal stage at this point in time, and we believe with the right infrastructure and technology, we can transform West Africa from a very high trade corridor to a globally competitive logistics hub.
Right, because if it's too expensive, getting the goods across, then when it gets to the customer, you end up paying so much. I've had experiences where it costs me, that's the cost of transporting the goods to me. It costs me as much as the product, itself. So, break it down for me now. We know Nigeria's logistics industry. We have, several players, at this point. What sets you apart?
It's quite simple. We've decided to do a few things, and we believe there's three critical factors. One is partnerships. We are not just another facility selling an open space of facilities to customers out in the market. We own the facilities. We are a Nigerian-owned business. We are the first of its kind to represent grade A facilities within the free zone. So you have all the free zone benefits. This includes corporate taxes, no corporate taxes, no withholding taxes, no value-added taxes, full repatriation of your capital, in foreign exchange, 100% ownership of your business within us. But I think something that stands out the most with our current customers is the ability to keep stock within a free zone, not having to pay the duties and only releasing those duties on a consignment basis.
Right, and definitely we keep talking about technology. Yeah. Some are talking about bringing artificial intelligence, into the logistics sector. What kind of innovation can we expect, from your company?
This is exactly what the market is looking for right now, because it's with the sudden increase. If you look at the rise of e-commerce and global, cross-regional trade and regional manufacturing, there's an absolute rise in logistics and the demand for logistics, but not just the demand for quality, reliable, and, system-driven logistics. And this is where the market is having an absolute gap where we are trying to fill the space. What we try to do with systems is create end-to-end visibility for our customers, where they can make informed decisions by supplying them data about the market, them learning the market, but also being able to make the right strategic decisions and to grow their market with a market share.
Right. And it's called a TY Logistics Park.
Yeah. So it's TY Logistics Park, FZE.
FZE. So, somebody could hear park now and think it's a park where you go and have fun.
Yeah, a water park.
Like a water park, So talk to me about how, in practical terms, and how the park works.
Right, so basically we are situated, we call it the orbital cusp of the Lekki Free Zone. So, as you know, there's an international MOU being signed with the new Lekki International Airport that's coming up, signed by SUMO. There'll be obviously the Lekki ports, and we have established ourselves within Alora City, and we are interconnected, which in general will mean we will be 10 minutes away from the actual international airports. We're 12 minutes away from the Lekki Free Zone ports, and then we'll be 40 minutes away from Lagos and 50 minutes away from Apapa. So what are we trying to do is any logistician will tell you that it's about accessibility, it's about efficiencies, and this literally ultimately drives down cost, right? And this is what we're trying to do. Our strategy is not just to play within the local Lagos market, but also to serve the rest of the region, which a lot of our international customers are looking not just from a local perspective, to export to the market, but you've got a lot of imports where the guys are trying to have access to the market and make it easier for themselves to find the reliable partners. And this is where we value our relationships with our clients, is that we're here for the long run. The fact that we are Nigerian owned means we're going nowhere. We've invested in the assets, and we have the ability to scale up as the economical conditions change. And this also enables our customers to grow, because we know that their performance is actually based on the economy growth. And this is where we scale up according to their needs.
Right. All right, talk to me about the significance of this park now. Definitely we've been talking a lot about AFCFTA. We've been talking about, trying to get Africa to trade with Africa, more. So what does this mean for Nigeria? West Africa, and you did also talk about, you've been in East Africa, Southern, so you technically know a lot about Africa.
Absolutely. I think the biggest issue we're having in Nigeria right now, and I did actually my whole thesis, on Nigeria's market and performance factors, looking at the Nigerian market. And the problem is, if you look at the ports, like you rightfully mentioned, to clear an average consignment takes 18 to 21 days. This is just in the Nigerian market, which means there's a lot more of these consignments by the MSC shipping lines being pushed to the other corridors. This could be in, it could be in Ghana, it could be Cameroon. So what we're actually losing is the opportunity to become the main regional hub for logistics. So the only way we can really improve those things to become efficient around port controls, the congestions, and finding it easier to move a shipment within country. So it's moving it in country and moving out of country. What we find is, first of all, is to establish a asset-owned facility where we can control the link between route to market solutions. This refers back to the logistics park and then the ports together with the airports, because at the end of the day, you want to be able to offer an end-to-end solution which become eventually a value chain to clients in the market. And what we found working very well is literally, it's a combination of the actual fit asset to build, fit for purpose to actually customers. So what we have is we've got solutions design engineers that's been building on this for about a year, taking the various verticals, because we're not just playing in one vertical. We're playing in the space of chemical, we're playing pharma, we're playing tech. So we are basically looking at the market, and we're very flexible with our solutions, because comparing it to the competitors in the market, they'll give you an open piece of facility and they'll say you have to put in your own people, your own systems, and we say we are actually partnering with our customers to deal with all the logistical complexities and all the headaches, and we basically get them to focus on the market and the market share.
Right, and I learned you're also going to be close to the Dangote refinery.
Absolutely, we actually got them in, and actually there's a bit of business that we've already, secured with the fertilizer plant. And we're already moving shipments in and out, with Dangote. So yeah, that's been ongoing. So we haven't opened up the doors officially. The launch is happening on the 8th of December. But the interest within the market has been very positive.
So we will expect the launch 8th of December.
Correct.
Then what are we expecting, after the launch?
I think it's about, obviously just making the establishment known, knowing that we are there. And also I've noticed in the industry, in Africa, people don't always realize the value of it until they start experiencing it. So it really is just getting into the market and exposing the services and getting people to understand that, resilience is all about looking at things differently. There's ways of making things more efficiently, more effectively, and eventually more cost considerate. And this is really where we're trying to pride ourselves with partnering with customers, because we believe through the necessary solutions, they can have the necessary analysis, and it is a long-term relationship that we're striving for. It's not just for Nigeria, but for the rest of West Africa. And really, it's to bring in those global standards, into the Nigerian platform, and basically getting the opportunity to get regional trade back to where it belongs.
Right.
And this is in Nigeria.
Fantastic. I know we like to value, how much trade, countries do with each other, continents. China, Nigeria, we like to value those trades to see if there's an increase or a decrease. So how much volume of trade are you expecting?
We've started phase one. So what we have in our logistics park, we refer to 100,000 square meters of free zone, logistics space. We've already developed the 2 grade A facilities, which is 44,050 racked locations in probably one of the best type of flooring models you'll see. It's a jointless floor with, the racked environment, but also it's taking other things into consideration. It's looking at compliance. It's looking at green edge facilities. We are utilizing 30% less of water and electricity than most of the actual warehouses within Nigeria. So we're also very, environmentally driven. So what we're trying to do from a trade perspective is, yes, the volumes are good, but it's more than that. It's about the leadership. It's about what we're trying to contribute back into the community, and, obviously the market and the opportunities for the Nigerian community that we also want to attract, coming and being part of the good story. So to answer you on the volumes, we are looking at phase one to do anything between 500,000 to 1 million metric tons annually. And this is consignments coming out of the facility. This could be a combination of manufacturing, raw material products, final produced goods, either coming into the country or going out of the country.
Right, and definitely we're trying to get an import substitution here. We're trying to get more exports, out of Nigeria. We've seen the federal government, try to come up with policies, so we don't, stay a net importer. We want to get more exports, out. And definitely now we have some, small businesses, trying to send out, goods, to the U.S., to China, and, where they have demand, for. So do you think that there's a place for small businesses?
Absolutely. We have the philosophy, and this is the team as well, with the team that I have, is every customer is important. And I have the philosophy with the team, doesn't matter how busy we are. If it's a client with 2 pallets in the warehouse, it will get the same attention as a client with 10,000 pallets in the warehouse, So, and that is with any type of need, whether it's clearing and forwarding requirements, whether it's route to market. We believe that service is the key, and this is the missing link within, the Nigerian market right now. So, and we've seen this with our existing customers. They are used to going into facilities and getting involved in the operations, where we constantly have to remind them to stay out of it, enjoy their cup of coffee, and just wait for the reports coming through. So it's simply electronic, everything being pushed out in a form of a notification. And, the actions gets handled from a logistics perspective through, the TY Logistics business and my team.
Right. How would you describe the size, of TY Logistics?
Yes.
Would you say it's one of the biggest in Africa?
I would say in its space, yes. Because, yes, there's a lot of competitors in the market that's got a lot of warehousing space. But what we offer is something unique. We own the operation. We own the assets. We're not just giving you an open piece of land. So what we have is that 100,000 square meter of logistics space, for open land and also for the facilities, but also looking at, the class of the facilities, the great, operations that we have with the racked environment, completely systems driven with machines, I have to be honest, which is not known in the market. It's just all about looking at efficiencies. When I take all those metrics together, and I would say from a metric scale perspective, that makes us unique in the market, and that makes us probably one of the biggest in what we offer.
Right, and definitely we're all looking for the trade enabler.
Yeah.
At this point, from your knowledge of the industry so far, how much of the transaction will you say you've been able to enable so far, and what are you projecting?
We are projecting in obviously full completion of the facility to probably do well over 1.5 to 2 million metric tons in the next 4 or 5 years. And this is going to be a multi-user, multi-sector business. So we will have pharma in there, we will have tech in there. We've got reaches on automotive, we've got oil and gas, we've got chemical. And this is the beauty about what we're trying to do, is being able to offer custom tailor-made solutions in different sectors. And people has questioned us in the past about how that could physically be possible. But we've achieved this in so many different countries, understanding that it's all about being specific to a client's solutions. And, at the end of the day, this is where we build confidence, this is where we build trust, and this is how we create a success story to, the market, because as our clients grow, we grow. And this is how we see it. And we're actually very excited to bring in new entry clients as well, whether it's a local business or an international business, and walk the journey with them, because we pride ourselves in those stories.
Right, and, definitely seeing that you've operated, in East Africa, Southern Africa. I'm sure you have some interesting stories of,
yes,
how you've been able to enable, some companies
yes,
scale,
yeah,
with your business.
Yeah. So, I mean, a simple example was Heineken in East Africa. They came there with a whole marketing team. They had not had a solution around an import of record. Their plan was to evacuate East Africa completely. And we basically had the stock already in the facilities, and we said, look, why don't we become the import of record for the clients? So basically, as a solution, we started becoming more than just a supply chain. We became the value chain by doing the trading. And we had the stock in our balance sheets. Basically trading on Heineken's behalf. We had the route to market team, we had the sales teams, we had the data accreditors department, and we literally just discussed at the end of the month the performances, around the numbers to Heineken, and that worked tremendously. So it's all about scale, it's all about the business case, and it's all about where our clients want to position themselves strategically within the market.
Right, and when I have CEOs with me, sometimes I like to always ask this question. When you come into a new country, or you're doing business in a country like Nigeria, what would you say keeps you up at night? And what would you say about the economy that's helping you sleep?
Yeah. Yeah, I mean, I for me, it's always believed that, you want to leave, a legacy, and you want to leave a place. For us, the excitement is to create a complete new sector. Opportunities for young Nigerians, it is really investing back into the community. It's about creating job opportunities. And really, as we know, that the competition will come, but this will open up a sector for great scale, and creating something that I believe in the market is much needed, looking at the demand. I mean, looking at the consumer market, 230 million people, there's an absolute need for, reliable and, absolute, standard logistics that complies to global standards, and that really is what makes me sleep quite well. What keeps me up is the challenges. I mean, obviously there's challenges in the market, but again, it's in any country. It's in Africa. We've had the same issues in South Africa. We had different issues in Kenya, and it's really trying to adapt. I mean, sometimes you need to change your strategy, but you never change your goal. And really, you need to be flexible within the borders of every country in order to survive. And that really, if you can adapt, to those conditions, you will do all right in life. And this is really where we are with Nigeria. The great thing is, I think we've got a significant response in the market to what we do, and the interest is definitely there. And I do feel that, seeing this in the past where clients might not see the value of it now until somebody else decides to be the pioneering entity to do it and realize it and understand the value of it, and then usually that becomes an enabler to the rest of the, of the sectors.
I like that one. When it gets tough, you can change your strategy, but don't change the goal.
You don't change the goal,
Don't change the goal.
No, never the goal.
For nothing.
100%. We got to stick it out.
Fantastic. What do you see in the next 10 years?
Well, I mean, for us, it's about, really, putting up scale. It's about, becoming a well-established brand within Nigeria. And I think this is, for us, we want to make this a Nigerian story. We've got, the backing from, obviously our investors. And this is about, making something unique in the market that doesn't exist and really trying to contribute to, I believe, the next, industrial growth phase of Nigeria.
Fantastic.
And I think our timing is absolutely right.
Fantastic. It was great having this conversation with you. Thank you so much. I was speaking with Arno van der Merwe, the Chief Executive Officer, TY Logistics Park, FZE. Let's get
tongue twisters there.
Thank you so much. It was great having you.
Thank you.
All right, we'll take a break now. When we come back, we'll find out what's happening in the global space. Just stay with us. All right, let's get a check on the global space now. But definitely before we get to other stories, let's get a check on what played out in the U.S. Stock market. That's a trade for yesterday. Our correspondent, Maria Bird, has more.
The U.S. stock market closed sharply higher on Tuesday as the Dow Jones was up at 1.4%, the S&P 500 also up at 0.9%, and the heavy tech Nasdaq rebound by the end of the day was higher at 0.7%. As many of us are hopeful that the Federal Reserve will make an interest rate cut in December. This has many hoping that the U.S. economy could be seeing an upward swing over the next few days and weeks ahead.
All right, we'll get more updates at 1:30 for what's playing out with most of those markets. But let's get to other stories now. We see in Australia, we see the inflation that rose there. That's in Australia. Consumer Price Index, it grew, more than expected. That's the inflation there. And definitely that's changed the stance there for the Reserve Bank's plan to cut interest rates further. Headline CPI inflation, that rose 3.8% year-on-year in October. And that's from data from the Australian Bureau of Statistics. The print, that beat expectations, that it would remain steady at 3.6%. The headline print was its highest level since June 2024. And now to other companies. Now we see Merck, the stock reached a 52-week high of $105 per share. That's a notable milestone there, hitting a 52-week high of $105.08. This peak marks a significant point for the pharmaceutical giant, reflecting investor confidence and market momentum. The stock has demonstrated impressive strength with a remarkable 32% gain over the past 6 months and a PE ratio of 13.9, trading at levels that we see analysts suggest is quite undervalued at this time. And to other companies now, we see Eli Lilly & Co. made a history by becoming the first pharmaceutical company to reach a $1 trillion market valuation. The remarkable achievement means that its largest shareholder, that's the Lilly Endowment, now holds assets worth approximately $102 billion as of Tuesday afternoon, trading in New York. The foundation owns 92.5 million shares, according to its latest Securities and Exchange Commission filing. And to other stories now, see Miami International Holding Inc., that's MIAX, announced it has agreed to sell 90% of its MIAX Derivatives Exchange subsidiary to Robinhood Markets Inc., that's ticker HOOD, in partnership with Susquehanna International Group. MIAX will retain a 10% stake in the exchange. The transaction involves MIAX DX, which operates as both a designated contract market and derivatives clearing organization, with regulatory approval from the Commodity Futures Trading Commission to list the fully collateralized futures options on futures and swaps. And to aviation now, Boeing has secured multiple defense contracts worth over $7.2 billion for military aircraft production and support services. The U.S. Department of War awarded Boeing's Mesa, Arizona facility a $4.69 billion firm fixed price contract for a new AH-64E Apache attack helicopter, longbow crew trainers, and related components. The contract includes spare and accessories, with work scheduled for completion by May 30th, 2032. The project is funded through foreign military sales to Poland, Egypt, and Kuwait, with $2.3 billion already obligated. And those are the top stories in the global space, and I'll be back again at 1:30. We'll give you updates of what's playing out with the major markets that we track. Hopefully we'll see some reprieve, following last week's plummeting of most of the major indexes that we track, and definitely we've seen Bitcoin also making some kind of recovery this week. We'll see if that continues to the end of the week. Thank you so much for watching. I'm Lade Williams. From me and the team right here at Channels HQ. It's bye for now.